Micah, what's going on, man? First a comment maybe, but I'm thinking there was a few people in the chat before you hopped in here. Pretty good day for earnings so far. I was really happy to see it. You know, last week we took a bit of a hit. Oversized a bit. A couple trades didn't go our way, but today things were looking really good. I don't know how the hell Curtis does it, but this guy's just on an absolute tear. Micah, were you in any earnings trades yesterday? I know you made some money on ARCX, and I heard about your little Uber debacle, but what were you in any other trades yesterday? Tyro, that's awesome, man. And Tyro, I got to say, a lot of times when people, join Predicting Alpha, they come into the community, they see the level of conversation, things like that, and they tend to sit back and watch for a while. I'm really happy to see you getting involved in the conversation. I would love for you to share your own views, own ideas, and questions as you go through the content. What I actually would recommend for you to do is in the terminal here, hop into the education section, go to the vault. So like if you're still trying to figure out some of the basics of options, bronze is good. And I'd always recommend going through part 1 of bronze anyways. The silver's pretty advanced, but it's in the education vault. That this is where we covered a wide range of topics. Like basically every volatility and option concept you can think of is in depth explained in here. So I would definitely hop in there. Spend a lot of time in there. Good morning, Atanis. How are you doing? So on today's live, everyone, what I really wanted to do was actually take ideas from people watching the stream and break them down with you, right? Break down the idea, see what the data has to say, and see how, as traders, we can find opportunity in them, right? Evaluate the opportunity and see if it's something that we should even be taking, right? One thing that I think is the biggest thing missing from the retail space is that nobody thinks about the value of the asset, right? They may have their view, right? So for example, I think Apple is going to go up. So, I buy a call or I do a covered call, but I'm not, but is that really, why would I buy a covered call instead of a call or anything like that? And I have to, in order to really discover that, I need to define my view better and try to price the asset, right? I should be buying a call if I'm very bullish and I think volatility is cheap. If I think volatility is expensive and I'm bullish, maybe I sell a put or buy if I have no view on volatility, maybe I buy the shares. We don't want to be, there's a tool for every job. And the way we really figure out what tool we should be using is by understanding the jobs, and knowing what is going to make us money is by finding better jobs. So that's what we're going to focus on here. I have one that I'm going to start with off the bat. I had a couple people, I'm part of another Discord where I chat with some of the members, and they were looking at Peloton. So let's pull up Peloton here. Now, unfortunately, Peloton has been taking a bit of a hit today, right? By the way, the data updates every 15 minutes in the terminal, so that's why you see a slight difference in the price here. Since we're volatility and option focused, it's not a huge deal. Volatility is not the fastest moving asset in the world most times, so it's not bad. So you can see Peloton's taking a bit of a beating today, especially really bad. But even in the last week, down about 5%. They have their earnings coming up on Thursday, and I'm seeing some news here. Peloton stock falls suddenly on recall news. It's taking a severe hit this morning on news that announced a recall on treadmills after a child died in 70 incidents. Okay. So they had some bad news come out. How big is this recall going to be? Is it all of them? Okay, so one of their major product lines, they've stopped producing. All right. Sounds good. Anything else that we should know about the company at this point, or are we looking okay? We can see that short-term vols are pretty bid. Right, but that's probably because of the earnings. So let's talk about, I know these guys are in leaps for the most part. So let's see if we plot the term structure here for Peloton, and we look at the 1 year options here. Right, let's go to the chain and first let's plot a 1 year option for Peloton and see what this thing actually like is sensitive to. Let's see. Right, let's say we do something like this, right? Something delta neutral. Fowl, what's going on, my man? We're just breaking down Peloton right now. I got a request from someone in another Discord to take a look at Peloton. They're in some leap positions on Peloton. It's not been doing amazing. And we're going to break down why, maybe what they could do, things like that. So here's the thing. When we look at a really far out option like this, right? So right here I have the 105 straddle, right? So I went for something close to delta neutral in the current situation. Let's look at what we're actually sensitive here, right? So we're going to take a look at this middle column here, right? This middle column here is it's this right here, right? So we put it at the money. There it is. We can see that we have 36 delta, minus 36 delta, minus 14 gamma, 51 theta, and 750 vega. So this is one of the major things that people make mistakes about when trading these further dated options. They think that the value of that option is strictly sensitive to the delta, right? It's like, oh, I have no theta, right? Theta is very low, it's safe, right? Very low theta, it's very safe. And if the stock trends up towards my strike, I'm going to be able to watch it and go, this is doing what I thought it would. And if not, my consequence is that little bit of theta and I can get out of it at some point. But here's the thing. What you're actually sensitive to here is vega. Like, let's say you bought this, right? So you own this position here. Right? Remember, when you buy it, you have the opposite view. So now we're positive 750 theta. And let's say implied vol on the 1 year comes down 10 points. Or sorry, down 10 points. Right? Your position's going to get absolutely clobbered and the stock hasn't moved. So when you're trading this far out, what you're really sensitive to is a change in view of the future, what the market thinks is going to happen down the road. Right? So for example, ARCX comes out. Right, this is a big trade that shout out to Micah, shout out to Steven for sharing this with the group. Right, ARCX comes out and the vols are trading on the 1 years or like 8 months at like 50 implied vol. And they go and they price it out. They look at all the components, they price it out and they say this thing should be trading at 30 vol or 28 vol. And it was one of the best trades ever because what they did was they came in and they were basically this, right? They basically, obviously it's a different stock, but they were like this. Vols came down like 30 points and now the position looks like this. They're making bank even though they're trading a 1 year and the stock hasn't moved, right? So we've got to know the product first of all. So that's part one of what I would say. Now, let's come back over here to Peloton. Let's see how this has actually changed in the last little bit. Right, so we're going to look at the term structure and how the term structure for Peloton has changed from today, and we'll look at a month ago. Oh shoot, I guess the term structure is still a little wonky. I got to refresh. Let me send Jordan a quick message here. Yeah, so Adam, we're going to definitely talk about the earnings event in a second here. So let's come into PTON. Perhaps what we can do. If we come over here, we plot the 2-year vols. So you have to think, like check this out, right? You're wondering why the position is not performing well. Well, there's 2 components that are probably contributing to it. Number 1, the stock is moving down. You're probably long like a leap call, right? That'd be probably fair to say. The second thing is in the last month alone, vols are down from 55 to 47. You're down 8 points on this thing. Right? So let's say you have a like a 110 call. All right? Let's say you got one of them. All right, so here's your position. Right? This is what it looks like. And then what happened over the last month is this dropped by 8 points. So even if the stock hadn't moved, you'd be down money. And the stock dropped 10%. You're down here somewhere now. So that's why the position's losing money, right? It's twofold. Number 1, you've got the delta moving against you in a pretty sizable amount. But also, it's your Vega. Your Vega's what's really crushing you right now. So, that is what we need to ask ourselves. We need to look at the vols for Peloton, and we need to ask ourselves, do we think the 2-year vol is fair value, cheap, or expensive? Okay? So, how can we go about doing this? Well, one measure that I use usually right off the bat is something like this, the volatility cone. Right, so the volatility cone here, it basically shows us the term structure. Right, so this is the term structure, and it allows us to plot some metrics on it, such as what's the highest the term structure's been, so what's the implied vol for different expirations, what's the highest it's been over the last 2 years, what's the lowest it's been, right, and what's the average. But the problem with the term structure right now is that, or the vol cone, is because we are coming out of a very high implied vol regime with COVID, everything like that, everything's pretty low right now. So just because 57 is the low that we're seeing here, it doesn't mean that it can't go lower, right? If we also think about, when did Peloton go public, right? How much data do we actually have to look at here? Right, we don't have very much. It basically came out just pre-COVID. Right, so vols initially look cheap. Right, initially they look cheap. But let's dig a little bit deeper, right? Who's a Peloton competitors? Do we have any competitors? Companies in the consumer discretionary are considered alternatives to Peloton, including all of these companies. Would we say these are fair comparisons? I don't know. Let's see. Once we can find something that we think is a good comparison, we will be able to do something there. Oh, by the way, guys, we created r/predicting alpha for anyone on here who's not an actual member of Predicting Alpha. You can come in here. You can see, you can ask questions first of all. Right? We give really detailed responses here. And, we have members coming. This is where our members come to ask like the questions that require long answers. So it should be a very, very valuable forum. We're actually already at 68 members here, which is super exciting. How many people do we have on here? 17. Probably half you guys are PA. So hopefully we get above 75 after this live. That'd be kind of cool. So Peloton competitors. Let's start with ATVI. Let's move this over here. Okay. So let's come over to relative value or correlation first. Peloton and ATVI. Let's see if they're actually correlated. Not really. Yeah, pretty low correlation. Is MAR one of them? Was that it? Not high enough correlation. NLS, do we have that in here? What is NLS stock? Let's see. Nautilus. Manufacturer of fitness equipment. Cool. Let's see if these things are correlated at all. I wouldn't say it's enough. I mean, yeah. Wait, why is it showing ATVI here still? I have to run. Okay, so it gets very correlated at some points. It was very correlated recently, but I wouldn't say this is strong enough either. Let's keep going here. NLS was looking close enough. So, okay, you know what? So here's the thing about trading, right? Always remember this, guys. As we work through this together on the stream, you know, 50% of me wants to keep it fun for you, and the other 50% knows that this stuff takes a lot of time. And that's the reality of it, right? You need to work with the data. You need to find things that are related that you can compare against each other, stuff like that. So let's assume that NLS is a decent comparison. It's like it's okay. It's like super okay. Let's go over here to relative value. And let's start doing a couple little tests, right? So first thing I want to look at is the Peloton 90-day vol versus the 30-day realized vol, and see what we get here. So what you can see here is if we plot the implied vol 90-day and the realized vol 30-day, and then we take a ratio of the two, we sort of get this little mean reversion process here. And we can see we're getting pretty close to the highs again, right? Or, you know, it's actually, it's pretty fair actually. It's not very high. It's not very low, it's not very high. It's potentially, like, you could call it in the middle. Okay, so there's no real spread there that we can take advantage of. Now, what if we compare that to NLS though? What's NLS look like? Or actually, before we do that, right? So in and of itself, I'm not seeing much of an edge. You know, I'm not seeing it being cheap or expensive really. But let's go look at NLS. Compare the IV 90-day to that versus what it is for Peloton. If you look at that, it looks pretty in line too. So let's keep moving here. We'll do NLS IV 90 versus RV 30, and we'll do Peloton as well. Now this is a cool little analysis we can do. Get the ratios going for both of them. NLS IV 90. 60, 73, 13-point spread. 13 points. It actually looks pretty in line, to be honest. So I'm not seeing much of an edge on the longer dated vols here. Right? I'm really just not. If we look at this though, the 2-year vol is getting absolutely smoked. Okay? So you need to ask yourself, like, why is this happening? Why is the 2-year horizon for it becoming so much like more certain? Right? We're expecting a lot less volatility in the long run for Peloton. And I think we're seeing this across the board with these more like hyped up names. It's a little more, you know, reasonable now, right? 47 vol on a 2-year here is pretty pricey, right? Like if we look at, you know, let's look at like Apple, for example. You know, Apple 2-year vol's at 30, right? And we're seeing this at 47. No real crazy volume going on here. A little bit of a spike today, right? Remember, this is today's number. So this is since the open, right? So we could see another little peak here in the volume. A lot of people getting hyped up over here. Seeing a lot of downside risk being priced in the short term, a little bit of upside. And now let's take a look at this earnings event coming up. Wow. Market's implying a really big move here on earnings. So I know that a lot of you are probably worried about the earnings event because of the news that came out today, right? So Peloton saying that they're falling on this recall news. So you might expect them to come out and talk a little more about the recall during their earnings, which I think is reasonable. But we also have to ask ourselves, how much do we know about this already? Remember, the market looks forward. So the reason that today the stock dropped is because we now know about the recall, right? So why would the stock drop again on earnings because of the recall? It doesn't really, make sense, because if you knew it was going to drop more on the earnings day because of the recall, you would sell it today, right? That's what the smart trader would do, right? It's worth $100 today. You think it's going to be worth $50 tomorrow. You sell it today and you short it. So today's price reflects that bad earnings, or bad maybe guidance change that's going to come from this. So you may want to dig into and be like, how well do we understand their sales around this? Is this like a brand new product that was super hype? We have no idea their margin on it or anything like that. No idea what the cost of the company is going to be for this. Or do we have a decent idea? Do analysts have a good idea? If they do, well, then maybe this implied move is a little inflated. Maybe it's a little too high. Right? A 10% move is a big move for a company on earnings. But what I would probably also watch for is a couple things. Number one, I would probably see if this earnings move increases more going into the event. I don't know if I'd be playing any sort of run up for earnings or anything like that. I don't think that's the play here. Besides that, you could maybe see the implied move increase a little more into earnings, especially if a lot of people start to panic. I would want to see the realized moves calm down a little before the event, right? So if non-event movements are 8 or 9% a day, well, then I'm not going to sell an 8 or 9% earnings move, because one of the things about volatility is it tends to cluster. Now, with volatility clustering, it means today's volatility is likely to be like tomorrow's volatility. Bronco, I hope you're on this call, man. You should be hanging out. Oh, wow. So I would be looking for that for earnings for sure. This would be a great trade for earnings if the vol does calm down. It looks pretty juicy to me. Now, one thing as well to keep in mind, I hear a lot of people talk about, trying to defend the position, right? It's like, okay, sure, it's down a ton, but I'm going to sell premium against it and recoup some of my gains. So there's a couple problems with this idea. First of all, short-term vol isn't necessarily directly correlated with long-term vol. So the market, could be saying, let's say this is the front month. This is like a year from now. The front month could be moving like crazy, but the market's also learning more about the company and saying that the back is coming down. So you could be getting screwed on both sides here. What needs to happen here is you need to be pricing these things. We can't just be doing it because of the story, right? It sounds good. You buy the long one and you sell the premium against it. It sounds great. Who doesn't want that? If a fund manager told me that, I'd give him my money. But at the end of the day, we know that that's not what makes money. We know there's no alpha there. When I say no alpha, I mean buy the stock. You'll do just as well. Or in some cases, you'll do worse with something like the PMCC because of that Vega exposure that we're not taking into account. Right? So that's my thoughts on Peloton. If you're holding one of those leaps and you have no view on the volatility, implied vol, I would exit it. I would convert it to shares if you're still bullish on the company. Why not? If you want some leverage, use margin. Then when it comes to selling premium against it, you need to look at it and determine if you think it's expensive. You need to always be thinking cheap or expensive. It's the big retail trap. Not thinking about the value of an asset is what crushes retail traders. I made a post about it sort of on today on our Reddit here. I'll put it in the group. You can read about sort of my vision, like why I run Predicting Alpha, why I put a lot of time into this. I dropped it in the chat there if you want to check it out. Earnings looks pretty good for them though. I would maybe be a seller of vol here if we see non-event vol calm down going into the event. And someone asked me actually, what about capitalizing on the premium after it bottoms? So I would agree with that. If you see, if you come in here and you see implied vol, stay around a similar level here when the stock stops moving, or shoot up and the stock stops moving, I would maybe come in here and be selling some vol. But I'd want to, have a pretty tight stop on it. Right? If you get another, if it goes from moving 7% a day to moving 1% a day, and then you get another 7% day, I would probably be exiting for a loss. Right? Just remember, these things can rip. They can do all sorts of weird stuff. These are the meme stonks, right? We gotta be smart. We gotta be smart traders. Live to see another day. All right? So, what else do we got going on here? We got Uber tonight. What's going on with Uber? If you guys have any more questions about that, by the way, feel free to just drop it in the chat. So the guys are saying that Uber is looking like a good one to take. So it looks okay. It looks okay. Right? We've got an average implied move of about 7 with an average move of about 6.2 and an average implied move of 8.71. Now, one of the reasons that this implied move is coming down is because Uber's it's getting older. It's not a toddler anymore. It's like a kid now, So we understand its temperament a little better. We understand what drives its movement. There's less risk around these events, and the market is clearly reflecting that it feels the same way. But here's the thing. 7% still a big move. Right? It's still implying a pretty big move. And as we've seen from the last few events, if we look at the jumps, the last year of events, it's not seen a jump that big. Meaning we can come in here, maybe provide that liquidity to people who want to buy options around Uber and maybe make a healthy little premium for ourselves. Let's come take a look at it. All right, we'll go to the weeklies here. We see decent enough spread. It's not super like illiquid or anything. And let's say we just sell in at the money. Now remember guys, we want to come back and check these numbers again at the end of the day. Earnings is all about isolating the event. There's no point in putting this trade on now or yesterday if you're Micah, idiot. And because now you have all this other exposure. I'm glad you made a bit of money, Micah, but we had a good laugh at your head ass moment there. Sell straddle. Let's see what this looks like. Right, so we'd put this on at the end of the day, and let's go and take a look at how this position would evolve. Come to the Volatility Analyzer here. Let me take a look at our term structure. We can see that the 10-day vol, the 10-day tenor would come down from 69 to 47. So that's like what, 23 points of vol. So we come in here, let's get rid of that, move it forward 1 day. This is what our position will look like in the morning. So let's stress this thing and see what some worst case, best case scenarios might look like. What would this look like if we got, let's say, a 10% move tomorrow on Uber? let's see. We'd be risking about $2,000 on either side, which is actually, this is quite reasonable. I actually, because there's so much implied vol, like of a drop here, this actually looks like a good trade. If Uber doesn't move, we'll make, $1,300, $1,200, something like that. And if we get a blowout at 10%, or let's even go to 12% here, but you're risking about, okay, at 12%, you're taking a pretty good hit, but yeah, 12% would be devastating. But it hasn't moved that before. The highest we've seen is 9.5. But let's call it an 11% move here. You're losing. You have about a little better than a 1 to 2 risk reward on like a blowout, which I think is great. Right, we have an edge here, so this is looking like one that I would probably take. One thing I like about this too is that it's not a super big stock. So if you're trading, let's say a 5K account, you could throw on a 1 lot here, look pretty good. It's definitely something that you could consider taking. Vol for CPNG looks kind of cheap before earnings. What day is CPNG earnings? CPNG earnings date. Expected to report on the 12th. Okay. Let's come in here. CPNG. Is this their first earnings or something? We have no historical data for them. Okay, yeah, so they're a new company here. So how do we know it's cheap? We really don't have much to compare it to here. Yeah, I'm not thinking. I'm thinking it's a gamble if you buy it. I don't have any experience. Well, to be honest, I don't have any experience in this, so I can't say it's a gamble or not. I don't know. I don't usually trade a company's first event unless there's just something absolutely absurd. Let's see here. Okay, so let's take a look at what run. When's run earnings? Today? After the close today. No implied move, eh? So that's definitely not right. That's just some bad data right there. P&L looks really good to short vol, but we can chat about this in the group after. We're gonna need to price out that implied move. It's definitely not zero, right? This happens sometimes, right? Especially if this is more of like maybe in a liquid name, you could definitely have this happen. This is the thing with working with data though, right? We only have the monthlies. Yeah. This is going to be a little more complex. So let's chat about this one in the group. It's showing you a 12 implied move. All right, let me refresh the app. Give me a second. All right, let's load up run. I don't know, why is it showing me this, man? Send me a screenshot on the Discord. Okay, yeah. So, Fal, great question. So, when we say bad data, so accuracy is like super important, right? The we so compared to other sources, it's on par, right? So if you go, so for example, when I say bad data, it's not like you wouldn't be, necessarily like getting information. A lot of times when the data itself is bad, it's like it would be something like if like okay, here's an example of bad data. If you have a stock where the bid ask is extremely wide, right? $5 or $1 and $10, it's going to show you that the mid is $5. And a lot of people would say the mid is fair value. But you can't really do that because if all of a sudden I come in and I put a bid in for $4, that mid is now $7. So the mid doesn't really mean much there. You wouldn't use that mid. Now, one other way that when we say bad data is on the back end of our stuff, sometimes places that we scrape from, they change. That's one example, right? So we would have to go in and manually change it. Actually update where the data is coming from so that it's pulling properly. Sometimes our data providers that we like pay for, they make changes. Sometimes a piece of code breaks. So there are bugs like that happen too. Now, if you're talking about another small scale production or smaller scale production, right? Like if we go to like Swaggy stocks, right? This is like, I'm pretty sure just one guy who made this thing for fun. Like this thing, I think there's like one stock that works on it, right? I've never really been able to get it to, like their sentiment stuff. It was a little iffy, you know what I mean? Like, you know what I mean? Like, look at this. I don't know what's going on, but I can understand it because this is one guy doing this project. Yeah, this is just a project he's doing. So we're a little better than this because we have two guys doing the project. We actually are in the process of bringing on more developers and stuff. What's awesome is now that we have a good group going here, we have really solid proof of concept for the business model. That clearly like you guys want this, right? And are as passionate about it as us. We've brought on a new developer. We're working with him right now, getting him set up, and then we'll be running a lot more smoothly. The thing is, if you compare us to, let's say, Bloomberg fixes things quicker. They have more data. It's a little cleaner because they have more time to spend on it. But Bloomberg also costs $30,000 a year. So when you kind of compare apples to apples, we're right in line with like some of the biggest data providers that you would see. If you go on to like Quandl or something, we're in line with all those guys in terms of the quality of the data. And as we get bigger, it will increase. Now the good thing is, if you're seeing data there, it's almost always like worth using. But as a trader, you also need to be checking stuff, right? So for example, it maybe be things like this. If we come into the Volatility Analyzer here, right? This is showing us the 10-day implied vol and 10-day non-event vol. It's little things like this that you have to think about, which is, well, if I come over here and, I'm trading, let's go to Uber. And I'm trading the May 7th. Well, this is a 2-day option. If the vol's dropping 10 points here or 20 points here or whatever, we can probably expect a bit of a bigger drop, seeing as this is 10-day, right? So it's a blend of the two options since 10-day doesn't exist. So the 2-day probably has more exposure to the event, would probably see an even bigger drop, right? So there is that learning curve where you also need to just be thinking at a different level as a trader, right? And I'm not saying you're not, I'm just articulating it for others who are maybe on the stream as well. Does that answer your question, man? Let me know if that does. Because if that does, guys, if you're not on the Discord or on the Reddit yet, I highly recommend you hop over here. for long answer questions, things like that, this is where you want to be. It's awfully quiet here. I definitely want you to, come liven this place up a bit. We got the Discord. We got this. That is our community, guys. Come read this this post I made here. Fal, give this post a read when you get a chance. It'll really give you an idea of my vision for the future, of what I'm trying to create with Predicting Alpha, the changes I want to make in the financial space. And by being a member, like sort of the mission that you're on with me. All right. Guys, we are going to wrap up this stream here. I had a lot of fun on this stream. This was a really good one. I really appreciated Bronco and Jimmy from the Theta Gang chat sharing the position they were in so I could help break them down. I really would prefer to do that more often, guys. You guys, it's one of those things. It's like when we crowdsource ideas, a lot of good comes out of it for everyone. We can refine it. We can make better ideas. It gets a little dull sometimes when it's always me trying to find a new idea, because here's the thing. As one individual looking, there isn't always a trade. Like, this is the key piece to know about trading. Like, it's not always there. The sauce ain't always there. Right? And obviously when you're using technical analysis or something, it is always there, because shit, I can look in the sky today and see a cloud, a cow pattern in the sky, in the clouds. It doesn't mean there's a cow in the sky. I'm looking for actual cows in the sky. Yeah, I did see that foul. I'm waiting to see what happens to Vol. If it continues to spike. The stock is continuing to drop. If you think this is going to continue to drop into earnings, maybe you can throw on a little 132 fly. Especially since the news is pretty fresh, right? Let's say we come over here to PTON. Right, we could maybe do something like this. Oh, we don't have many strikes here. We could do something like this. Let's see, 85, 75, 70. No, that's not that great. It's not that great, to be honest. It's not as juicy as I'd like to see. Let's say we go 85, 65, 55. Is there a 55 strike? Yeah, not that juicy. Maybe if we do like a this might be a better way to go. Right, something like this. If you think it's going to get absolutely crushed, but yeah, foul. Just remember, like, the market tries to price in these drops like really, really well. Obviously, they're not perfect at it, but they do. So what I would say to you is, like take a look at this butterfly, right? If we go 80, 75 here, or let's go 80, let's go 75, 70. Right, 75, 70, we're getting like a ridiculous risk reward, right? Risking 600 to make 900, and it just basically has to cross the 75 mark. But here's the thing, right? In order for it to cross the 75 mark, we're talking about another, 13 point, more than that, 15 point drop in the stock, right? Like, Jesus, this thing has to get absolutely destroyed, 20% down from here. So it's too far. That's why you're getting the leverage, right? There's always a reason why you're getting it. This butterfly here, it's okay. It's okay. We don't really have the strikes to work it, though, but it's worth playing around with, right? Play around with it, and yeah. Let me know what you end up finding. But with that being said, guys, I'm going to wrap up the stream here. This was a lot of fun. Let's do it this way more often. It keeps me motivated to keep coming back and breaking stuff down with you, and I'm sure it was more fun for you as well. So with that being said, quick reminder if you're new to the stream, my name is Sean Ryan. I'm co-founder of Predicting Alpha, and we are here to provide the best data insights into the option space. So we'll see you on the next stream. Take it easy, Fal. See you around.